OG John AG here. A massive reversal has just unfolded. Gold has surged roughly 11% off its lows and is now back above the 4,180 level, reclaiming about $3.07 trillion in market value in only 30 hours. Silver has rallied nearly 20% from its bottom and is trading back above 88, adding close to $800 billion in the same 30-hour window. That's almost $4 trillion recovered in just over a day, roughly 35% of the recent $11 trillion wipeout. And here's the part most people are missing. That $4 trillion snapped back in 30 hours while retail investors were panic selling. This is exactly what forced liquidation looks like on the way down, followed by a classic short squeeze on the way back up. Volatility itself is not the enemy, yet volatility is the opportunity. Gold is back above 4,900. Silver is back above 88 after an extremely violent shakeout from all-time highs. Precious metals just added more than $4 trillion in total market capitalization. Check my X account. I tweeted a few hours ago about the consequences this channel and its viewers had to deal with after I published a video on JP Morgan's planned crash. Once you read that post and watched that video, you'll also realize something else. I was the first person to break this story. Since that video went live, my viewers have been unsubscribed repeatedly. At the same time, channels that copy my titles, thumbnails, and analysis have exploded in growth over the past few days. Every time our team uploads a video, within hours, copycat channels start mirroring our thumbnails, our titles, and even our exact analysis. That's because they know OG is the source code. Without my content, hundreds of these channels would disappear overnight. But Team OG will remain right here at the top, continuing to guide our people. Our analysis will always stay unbiased, deeply researched, and straight to the point. As confident as my team is in precious metals, we are not blind to the way markets are manipulated by institutions or how the system is desperately trying to avoid showing visible cracks. If you're here for hype, I suggest watching other channels that simply repackage my work. This channel was built with a mission of education and unfiltered truth, and we will not back down, regardless of the consequences. My team has never asked you for money and never will. Anyone who does so while claiming affiliation with us is a scammer and should be reported and avoided. Our only official handle on YouTube and on X is ROG John AG. We have zero affiliation with copycats or their hype-driven narratives. Regarding the JP Morgan video specifically, my team is currently conducting a full investigation into the consequences it has created for our channel and for our viewers. We'll update you very soon. Now let's talk about why this $4 trillion reversal matters even more than people realize. Another 2.8% of silver left the vaults in a single day. Vaults are draining faster and faster. At the same time, China has just revealed its endgame. The official website of China's central government published a major article by Xi Jinping outlining the construction of a financial power. Here's the key detail. The Chinese language version of this article is dramatically different from the English translation. In the Chinese version, 6 core tasks are laid out, and at the very top of that list is having a powerful currency. Building a strong currency is the #1 priority in becoming a financial superpower. And the prerequisite for a strong currency is gold pricing power. That means becoming the world's #1 producer, consumer, and importer of gold, and holding the largest gold reserves on Earth. This article was published in Qiushi, and it's effectively the September 3rd military parade of the financial sector. It signals that China is nearing the end of its preparation phase, and that its massive gold reserves will underpin the internationalization of the RMB. The global final battle for gold is about to erupt. Gold determines the value of national currencies and defines the next international financial and monetary order. China is one of the central players in this final confrontation. Let that sink in. This is not speculation. This is official Chinese government policy, published directly under Xi Jinping's name. Gold pricing power equals currency strength. China is positioning itself for the final battle, and it's happening in real time, right in front of us. Precious metals pricing is shifting east. Whoever controls and processes the most silver gains leverage. Whoever holds the most gold ultimately has the final word. And the data proves China is executing this plan. China is purchasing roughly 10 times more gold than it officially reports. In November, China bought 10 tons of gold, 11 times more than the 0.9 tons it publicly disclosed. In September, the central bank acquired 15 tons, again nearly 10 times the reported figure. They are accumulating quietly while releasing minimal official numbers. The true size of China's reserves is far larger than anyone publicly acknowledges. As I'm recording this, here are the current prices. Western spot silver is around $88. Shanghai spot is near $114. Shanghai futures are trading at 102 after bouncing from 95. Premiums have pulled back from yesterday but are still holding near $16, roughly a 20% premium. After a 40% crash and a 20% rebound, the premium has compressed but remains elevated. Physical metal is still trading above paper. Now let's tie this $4 trillion reversal to what we've been discussing all week. This entire drop was 100% manufactured by large players. While the crowd panic sold, hedge funds and central banks quietly accumulated the dip. They used algorithmic execution to lock in volume right at the bottom. Remember this, the screen price you see is the paper derivative price. It's leverage. It's speculation. It's artificial. The real price is what it costs to get physical metal into your hands. Look at what's happening in Singapore. Despite falling prices, people were lining up to buy gold. On Monday, retail investors flooded United Overseas Bank, the only bank in Singapore offering physical gold. Even as bullion prices collapsed, buyers stepped in aggressively, betting that gold's core fundamentals remain intact. This scene highlights extraordinary retail demand and shows that even sharp declines are not stopping individuals from accumulating physical gold. Meanwhile, gold prices have jumped $500, about 9%, from the lows back to $4,900. At the same time, paper market activity exploded to levels never seen before. The largest silver-backed ETF, SLV, recorded a staggering $41 billion in trading volume on Friday. SLV traded more volume than any single stock on the planet that day. That's not retail behavior, that's institutional positioning, that's the paper market going completely berserk while physical buyers quietly line up in Singapore. All the banksters managed to do yesterday by smashing silver lower from Friday's lows was reduce total CME silver futures, open interest by only about 5,600 to 6,000 contracts, bringing it down to roughly 142,000 contracts. For perspective, back in 2011, during the Reddit-driven silver squeeze attempt, open interest was over 250,000 contracts, and volatility exploded to 138. For anyone who still believes this move is retail-driven, the data tells a very different story. This is not retail. Retail panic sold at the bottom while institutions accumulated. The $4 trillion recovered in 30 hours proves it. Retail does not move $4 trillion in a day. That's sovereign wealth funds, that's central banks, that's China executing its gold strategy while paper prices collapse. There is an active war between the US and China over scarce and critical silver. Good luck to anyone shorting into that reality. The US government is now starting a gold and silver stockpile. Trump has unveiled a $12 billion critical minerals stockpile plan in a clear effort to counter China's dominance. The project will be initially funded by a $10 billion loan from the U.S. Export-Import Bank, along with nearly $167 billion in private capital. They are locking in critical metals ahead of currency devaluation. The government is effectively telling you to own real assets. And right now, there is only one single 1,000-ounce silver bar left available for pre-sale at BullionStar. After that, this major bullion dealer will be completely sold out of the bars industrial buyers depend on. The physical shortage is not theoretical. It's happening. Dealers are running dry. Vaults are draining 2.8% in one day. $4 trillion recovered in 30 hours. China buying 10 times what it reports. The squeeze has begun. The gold and silver surge is only getting started. Margins were raised to try to stop it. Prices were manipulated to kill momentum. And yet metals keep ripping higher. Banks are trapped. The squeeze is happening now, and most people have no idea what's about to hit them. Now we have to address the risks because real headwinds exist. Japan's 30-year bond yield just hit the highest level since these bonds were created. The US Federal Reserve is now actively supporting another country's currency. Japan has the worst debt crisis of any major economy on Earth, with a debt-to-GDP ratio of 250%. The US sits at around 120%. Japan owns $1.22 trillion in US treasuries, more than any other foreign nation. For 3 decades, Japanese investors have relied on the carry trade, borrow at near 0% in Japan, send the money to the US, buy treasuries yielding 4 to 5%, and pocket the spread. But now Japanese bonds yield 3.7%. The spread has vanished. The free money trade is over. Why would Japanese investors send capital to the US for an extra 0.3% while taking on currency risk? They won't. That means hundreds of billions, potentially the entire $1.22 trillion over time, could be pulled out of US treasuries. When supply increases and demand drops, yields spike. When yields spike, everything else falls. The S&P has already dropped 2%, erasing over $1 trillion. The U.S. Treasury Secretary is reportedly calling Japan, urging them to calm markets. And the Fed is stepping in to prop up the yen. The U.S. dollar was sold off last week at the fastest pace in at least 2 years. The 10-year Treasury yield is approaching levels not seen since August. This is systemic stress. This is why gold and silver were initially hit. Forced liquidation driven by margin calls spreading through the system. But once that forced selling ends, the underlying bid comes roaring back. Central banks buying, China accumulating, physical supply tightening, fundamentals overpower paper manipulation. Here's the bullish case. The stock market is entering its final bubble phase, while gold, silver, and select strategic commodities continue to massively outperform, signaling that something is deeply broken. U.S. stock market concentration is at all-time highs. The market has never been this top-heavy. When this structure breaks, capital flows into real assets, gold, silver, and physical commodities. The rebound has been violent, and metals are far from finished. Can gold reclaim 5,000? Can silver challenge 100 again? Momentum is shifting. Vaults drained 2.8% in a single day. China is buying 10 times what it reports. Singapore is lining up. Bullion Star is down to 1 bar. 4 trillion snapped back in 30 hours. The paper flush created the opportunity. Now physical reality is reasserting itself. China is preparing to officially reveal its true gold reserves. If Xi's article is the September 3rd military parade of finance, and preparation is nearly complete, then a reserve disclosure could be the trigger. When China announces reserves 10 or 20 times higher than officially stated, the gold market reprices instantly. Every central bank on Earth rushes to accumulate. The final battle begins. So where does that leave us? First, $4 trillion recovered in 30 hours, gold up 11% from the lows, silver up 20%. This confirms Friday was forced liquidation, and this week is a short squeeze. Retail sold the bottom, institutions bought it. SLV traded $41 billion in volume, a world record. Singapore lined up. Vaults drained 2.8% in a day. The physical bid never disappeared. Only paper was flushed. Second, Xi Jinping's official article outlines China's gold strategy. Gold pricing power equals currency strength. It is the top priority for financial power. China is buying 10 times what it reports. 10 tons in November versus 0.9 officially, 15 tons in September versus minimal disclosure. The global gold endgame is approaching. Pricing power is shifting east. Whoever holds the gold holds the final say, and China is positioning while others stare at paper volatility. Third, the U.S. is launching a $12 billion critical minerals stockpile. Japan's debt crisis threatens to unwind $1.22 trillion from U.S. treasuries. The dollar is being dumped at the fastest pace in 2 years. These forces create chaos. But the $4 trillion rebound in 30 hours reveals underlying strength. Banks are trapped in shorts. Margins were raised, yet metals keep rising. Physical supply is scarce, dealers are selling out, vaults are draining, and the squeeze is underway. The unresolved tension is this. $4 trillion recovered in 30 hours, while Japan's carry trade unwinds and treasury yields spike, creating systemic risk. Does forced liquidation return and push prices lower again? Or do physical shortages and China's gold strategy fuel the next explosive leg higher? March delivery is approaching. COMEX registered inventories are depleted. China is accumulating quietly. Singapore is lining up. I can't wait to see where silver trades in March. Do your own due diligence, understand the risks. Japan's debt crisis is real. Treasury yield stress is real, but so is a $4 trillion rebound in 30 hours. So is a 2.8% vault drain in 1 day. So is China buying 10 times what it reports. So is Xi's gold article as official policy. Paper markets create volatility. Physical markets create the floor. Know which game you're playing, short-term or long-term. Invest with logic, not hype. Think for yourself, and never follow anyone blindly.